Okay, so those of you that were around that day, I mentioned how part of what we do in the fostering program is to expose you to more than one strategy. Unfortunately, we are not psychologists. We can't say which strategy will suit you. You have to do some work to find out which one will suit you. Some persons, it takes them 3 months, some 6 months, but you end up finding what suits you. What is most important? How will you discover what suits you? There are 2 ways of discovering what suits you, right? The first method, just a moment, my screen seems to be frozen again. I don't know why. Right, the first method is to backtest. And the second method is to forward test. The first method is to backtest. The second method is to forward test. Now, usually backtest is good. It helps you to know the edge of the strategy. So let's say you're using AQZ, or you're using HPLR, or you're using order block, the source order block breaker model to trade. You see one Hikinashi or RSI strategy on YouTube, and it looks simple. The point is, how profitable is it? I can tell you for free that majority of the strategies that are out there on social media for free are not that profitable, right? So how would you determine if that strategy is profitable? You go through a process of backtest. So backtest is synonymous to going to, well, these days people don't have newspaper stands. But when I was growing up, newspaper stands were very, very common. So what people do is that they go to the newspaper stand and they quickly just scan through the newspaper, and maybe like 4 or 5 brands of newspaper. You now look at the contents and determine that, okay, I think I'm going to buy this. So you look at Vanguard, you look at Punch, you look at This Day, and you look at them. You say, okay, well, from the contents I'm seeing, I'm going to go with Punch. So what backtest helps you to do is gives you a sort of bird's eye view of the strategy. Then you can now make up your mind if the strategy is profitable or not. Now, there's a proper way of doing a backtest, and I won't go into that. We'll cover that in the fostering program. But there's a proper way of doing a backtest. You must have data. You must be able to collate data. Let me see if I have just one example to show you here. So these are some backtests from people in the present class. I'll just show you what it looks like, so you understand what I mean by collating data. Right, this is someone's backtest. This person backtested one of the strategies that we taught them, and this strategy is based off of a 4-hour based strategy for people who are busy and will come to their charts every 4 hours or every 8 hours, as the case may be. This person backtested from July to October. Look at the amount of work you have to put in, right? It can't be done, you can't do it lazily. Look at the amount of work that had to be put in to be able to arrive there. The person checked, okay, price took out previous day, I'm entering on 1 hour close. This didn't hit stop loss. I got TP1, TP2, TP3, TP4, TP5, TP6. The next trader came straight to SL. The next one went from TP1 to just TP5 and stopped. And that person did everything and now analyzed it. If I traded from July to October using this method, using a trade plan, every back test comes with a trade plan. And a trade plan means that you check every trade must follow exactly the same order flow in terms of sequence. This trade had 5 losing trades. Stop loss was 5 losing trades during this period of July to October. 17 winning trades if you are going for 1:1, 14 winning trades if you are going for 1:2, and down 6 winning trades if you are going for 1:6. So that means in total we had 22 trades, 5 plus 17. Right. So if you want to check the TP hits, this will be 17 times you hit your TP. If you are doing it for 1:1, this is 14. This is 14 times that you hit TP2. Multiply that by 2, you give you 28. This is 10 times you hit TP3. Multiply that by 3, it give you 30. So if you are risking 1% and you are going for 1:1, you would have won 17% and lost 5%. So your account growth will be 12%. Right, your account growth will be 12%. If you are going for 1:2, you would have won 28% and would have lost 5%. So your account growth will be 23% and that, right? So if you divide this by 4 months, this period was for 4 months, it means if you trade this particular pair, EJ, using this strategy, and you are going for 1:1, you would grow your account by 3% on an average on a monthly basis. If you go for 1:2, you grow your account by 5.75% per month, and like that. Obviously, if I'm going to trade this strategy, I will stop for 1:2. Hey, people keep on. Shout yourself, please. I'm coming. Let me do that. Mute upon entry. So, all right. So, right. So, I want you guys to see that. So, if I'm going to trade this strategy, for example, now I might go for 1:2 of 45%. Look at that win rate. It's very small. My loss rate will be 54%, but I'll grow my account by 6% every month. And this is just EJ. If I have 2 other pairs that look similar to this, it means I can grow my account by 6 times 3, which gives me around 18% on an average, plus or minus 3, 15% every month, right? And I won't have too many trades, just few trades. Look at them, right? Practically, you have 19 trades in 4 months on one pair. So it takes a lot of work to do backtest. But again, what does backtest do? This is somebody else's own. Right? The person dropped his trade plan. I don't want us to see that. But that's the result again for this person. This person worked on AU, AUD, USD, and that is the result there, right? That's the result. Average growth 5.3 and like that. So when you do a backtest, you just check, is this thing profitable? Right? I came to TradingView because I want to show us something. I was discussing with some friends just yesterday. I had a webinar, a Zoom meeting with some of my friends, and we're considering a project we're working on. And somebody referred us to, sorry, 1 minute. All right, so one of them mentioned this strategy for one of the, mentioned this particular tool called Super Trend. I wanted to use it for one of the non-Forex trading styles we were working on. And I told the person I had worked on this Super Trend. I saw something like this Super Trend about 2 years ago. It made a lot of before. So many people were talking about it. But then I went to backtest it and I was losing money. Why was I losing money? When the market is trending, it will be making money. But when the market is ranging, it will be losing money. And it turned out that the way the strategy works, it will lose more money than it will make, because it doesn't have a filter. If I was going to design a strategy with what I know now, I will put a momentum filter into it, and that might just make it work. But as it is, it doesn't work, right? The person still didn't want to believe, of course, because the person has not done a back test. I know you've heard so many good things about this strategy. Thankfully, this strategy has, the person who created the strategy, the indicator created a strategy with it. So if I come here and I try super trend, all right? This is super trend itself. If I click super trend strategy, right, you will notice that it has a strategy on MT from TradingView. Some of you don't know this. So you can backtest on TradingView, you can backtest on MT4. I'm showing you how to backtest on MT4, right? I'm showing you how to backtest on MT4 today. So this is the strategy. It is mimicking, assuming that you're going to take all the trades, right? You can see where there is a long trade. It's open a long trade here. It's open a short trade there, right? Red, short, long, blue. Now look at how the strategy has played. Anything in red means it was a losing trade, and anything in gray means it was a winning trade, right? But let's go to the performance summary. If I go to the performance summary, you will notice that this thing has a net profit of negative, right? It made a gross profit of 1,542, but made a gross loss of 2,090. Meaning that if you apply this strategy, even though it looks sweet, I mean, doesn't it look sweet that you have something, an arrow telling you buy and an arrow telling you sell? It looks sweet. But if you trade this strategy, because you can't trade it more efficiently than a computer, this is computer generated. You can't be smarter in execution than a code, except you modify the strategy. If you use this strategy as it is, you're going to lose money. But when you see it on YouTube, it isn't going to look like this. It will look very, very sweet. Oh, you just took a sell. Look at that massive drop. Oh, look at today. And the person will say, look, you enter from here and you went down massive, something percent. In real life, if you try the strategy, you lose. Why would you lose? Look at this region here. Look at this place, right? You sell, you lose. Price, you buy, price comes down, you lose. You enter a sell, price goes up, you lose. You enter a buy, price comes down, you lose. You enter a sell here, right? Exactly where you enter the sell, price start pushing up, you lose. You enter a buy, it gives you small money, then drops, you lose. So if you add all the losses here, it can't cover for the one win you are having. So not every strategy that glitters, no matter how sweet-mouthed the mentor is, works. So when I look at Simply Pips, I'm not surprised that we're not going very, very fast, right? Because we don't say so many sweet things. And if you come and post big results, we'll tell you, show us the setup. This is real, guys. Not everything works. If you put stochastics overbought, oversold, you put it together, it makes sense. But when you go to backtest it, or when you go to forward test, you just discover that you are losing money and not making money. And we're in this business to make money, not to show our demo accounts when we win. And the remaining 21 days in the month, we will not talk, right? So when we're talking about backtest gives you an eagle's eye view, right? You have more or less like an eagle's eye view of the strategy, right? You are looking at the strategy and you can backtest 6 months in 3 days, right? So when you do this, what it tells you is helps you to know whether a strategy is a winning strategy, whether it is a break-even strategy, or whether it is a losing strategy. So a short form for this, we still have an edge in the market. After you've determined that this strategy has an edge, the next step you need to take is this strategy right for me? Is this strategy compatible with my personality? If you are somebody who loves to play games, you're a gamer, maybe you have a computer in front of you and you love playing games, you can sit down and hold the console and play games. And as you're playing games, they are shooting you, or you are driving and you are somersaulting, you are moving. You might be somebody that can be able to be a scalper. Why? Because you have that ability to sit down, take split-second decisions. When the bullet is coming, you dodge. Split-second, your hands are moving fast. You might be a scalper. You might not be a swing trader. If you're somebody who is a melancholic, who likes to sit down and plan their things before it happens, right? You might not be a scalper. You might be an intraday or swing trader. So you might have backtested a scalping strategy, and the scalping strategy has an edge, but you will not be able to execute it because your personality will not allow you to execute it. Right? So beyond looking for a strategy with an edge is the fact that you need to look for a compatible strategy with your personality. Unfortunately, it isn't easy. Some people are lucky. The very first two strategies they come in contact with, they are compatible with it. Some takes them 6 months, 7 months, 1 year, 2 years, depending on how lazy or how hardworking they are. So how will you know if a strategy is compatible with you? How would you know that a strategy is basically compatible, right? There are two broad ways of knowing if a strategy is compatible with your personality. That is outside the psychological way. I'm talking about hands-on. The first way is to forward test. The first way is to forward test, right? Forward test means that you open a demo account or a live account and you practicalize that strategy as it goes. You are practicalizing it, right? And it is the best way. It is the best way to find out if a strategy suits you or not. Forward test is the right way. So you've learned the strategy, HPLR, it looks sweet. Bishop has told you it's very nice. He even convinced you order block is king. You tried it. You are getting results, but you are finding it difficult to blend in. It means that strategy is not for you. You leave it, right? So you forward test. Now, the second way, which is not actually the best way, but it goes a long way, is to simulate forward test. You simulate it. So it's actually a back test, but you do it as if it is a real live trading. It isn't the best because, again, you could do 6 months forward test, simulated forward test in 3 days. So it gives you a false belief that things can happen fast. You know, when you click on the mouse, you see it when I'm doing the practical with you guys. When you click on the mouse, you can go through 1 hour in less than 2 minutes. But in real life, you have to wait for that candle to form. It's going to take the whole 6 hours for it to form, right? So it isn't the best way, but it is the second best, right? Because when you forward test, if you need 30 days to assimilate the strategy, it means you have to forward test for 30 days, and that is 30 days of your future. 30 days of your future. So if I'm going to wait, the best way I would suggest is you do a back test simulating a real life situation. Do like 1 year or 6 months or 2 years back test. Within that period, and you can do this in 3 days or 4 days, or 1 week, depending on how free you are. Within that, it will give you some form of information whether you can adapt to that strategy. Right? You see, when we come to the practical, you see what I mean. Then once you've been able to identify one strategy that suits you out of all the strategies you back tested, you can now go and forward test that one. Rather than trying to forward test A, then it doesn't suit you and you spend 60 days, then you come back and forward test B for another 60 days, you can collapse that 120 days for A and B, use 1 week to backtest them in a simulated environment, and then select one and go do your backtest for 60 days. Right? So before we go practical, this is the reason why if people ask in Simply Pips that which strategy is best for me, or what is the win rate, I said, we don't know. 5 people can trade the same strategy and get different results. Right? So let's go to the backtesting tool. So there's a tool here we can use for backtest. It's called Soft for Forex Simulator, right? Remember I said you are simulating a live event. So if I drag it to this chart, I'll need to click on Allow DLL Imports, and I'll click on OK. It's going to load the simulator for me here. Let's wait for it to load. So once it loads, the first thing you need to do is you need to go to the data center. You need to go to the data center and download data for the period you want to backtest. I want to advise here, don't download everything. Don't click select on it will eat up space on your PC. Right? Let's say you want to deal with Euro USD. You click on Euro USD, right? You select the range you want to download, right? Let's take AUDNZD, for example. I click on AUDNZD and I say download. It will ask me what years, what range I want to download. I want to download the last year data, 2 years data, or the likes, right? So once you do that, you click on download it to download. I have downloaded from the 16th of January 2020 till this date usually confuses me now. Okay, 10th of August or thereabout, right? So I've downloaded that already. Yeah, and I've downloaded some of this. So you have to do that if you are doing this for the first time. Once you've done that, you close. Then you go to New Simulation. You go to New Simulation, click on it. Once you click on New Simulation, the currency pairs that you've downloaded already will appear here. Right? So let's take, for instance, we're going Euro USD. So I'll click on Euro USD. When do you want to start your simulation? I want to start my simulation from January 2020, or do I want to go to maybe sometime this year? And I want to start from, let's say, June. I want to start my simulation from, let's say, even August. I want to start my simulation from August. So I'll click August. I'm starting my simulation from August the 2nd. Right? What starting balance do I want to start with? Let's say I'm going with a $10,000 starting balance, and my currency of choice is going to be USD. The time on my chart should be GMT, which will be the same thing with MT4. Do I want to allow rewinding? Yes, I want to allow rewinding. What do I want my spread to look like? Fixed or variable? I want it to be variable so that it looks like real life. Do I want them to charge me for commission? Yes, if you are trading real life, you have commission, and your commission may be $1 per USD or something like that, depending on the broker you're using. When do I want to end the simulation? Maybe present the end of the data, so I uncheck that. Right, I'm done with this. I'll click on Start Simulation now. So I click on Start Simulation. Once I click on Start Simulation, it will bring up a dialog box. This dialog box, I will go to Charts here. I'm going to go to Charts. And let's say the strategy I want to trade is a strategy that helps me get entries on 5 minutes. Or let's say I want to trade H4PC and entry on 30 minutes, something like that. Whatever the case, the time frames you need to open the chart in those time frames. So in this case, let's say I want to use a 5 minutes time frame. So I'll click on 5 minutes here and I'll click on add, right? Once I click on add, it will add a 5 minutes Euro USD for me. Let's say I also want to see a 4 hours. So I'll click on 4 hours and I'll click on add. It's going to open 4 hours for me. Let's say I also need 15 minutes or something, whatever I need. I'll click on it, 15 minutes, add. It's put 15 minutes for me here. Now that I'm done with this, the next thing I'm going to do is I'm going to click on open. So I want to click on open. I'll click on open. It should open a chart for me, but it didn't. I'll show you what to do if it did open. It told you here, if automatic chart opening fails, open your chart manually in the MetaTrader. In MetaTrader, you have to go to main menu, go to file and open offline. So let's open for 4 hours. I'll click on 4 hours, right? It has also opened. So I'll click on close now. In your own case, it might open automatically. If it doesn't come to file, go to open offline. You'll find them there. See the 5 minutes, and this is the 4 hours, right? So I'm going to click on 5 minutes. I'll double click on it. Boom, and the 5 minutes chart open. I'll go to file, offline again. I'll click on the 4 hours, double click on it. It opens, right? So now I have my 4 hours, and I also have my 5 hours and 5 minutes charts opened, right? Let me quickly close some of these things I have here, so we can easily navigate our charts. All right. All right. All right, great. So this is what I have now. I've closed everything. I have those two, 5 minutes and 4 hours, right? So here I can minimize this by clicking on the minimize button, right? You should have a template already. You should have a template. The strategy you want to use may most likely have a template, right? If it's a naked chart, then just have a naked charted template. I'm going to use a scalping strategy on 5 minutes. So, and I have my template already. So I'll go to my templates folder here, and I'll call up that strategy. I called it test. So I'll click on test. So here I have my test of 4 hours. I'll go to 5 minutes, minimize this, come here, click on test. Now I have my test for 5 minutes. If I want to see them side by side, I just come to this button here and arrange the window. Now I have my 5 minutes and my 4 hours, right? Practically, I can drag my 4 hours this way and 5 minutes even more, so I get to see it, right? I can see them clearly. So I come here and I click on this button here so that charts keep showing. I can even drag this closer, come to this other one, do the same thing and drag it, right? So here you can see my 5 minutes to the left and my 4 hours to the right, right? If your strategy is order block, for instance, you can simply come here and mark up this order block, right? Let's say your strategy is an order block. You can mark it up. And so if price comes into this zone, I'm going to look for a sell, right? And what is going to be my sell? My sell should be that price has taken out Asia high or something. Let's say that is your strategy, right? So you now decide, I want to trade as if this thing is happening live. I don't want to take Bishop, Prof, Dr. by anybody's words. I want to trade it live as if it is happening. Will I be able to do this thing? Will I be patient enough, right? So you come here and you go to your position size calculator. Here, always have your position size calculator on, right? You go to your position size calculator. We have a $10,000 account. Sorry, let me remove this. $10,000 account. I want to reach 1% every time I take a trade, right? So let's let's leave that. Let's come back to our MT4 here. So here on this button here, you can see I have 5 minutes, 4 hours, and 15 minutes. Those are the time frames that I downloaded, right? So I click on my next bar. If I click on next now, the candle starts forming on MT4 like it is real time. If I want it to form faster, I'll go to 50 minutes and click. It will form. It will take 3 candles at the same time, 3 5-minute candles at the same time, right? So let's do that until the end of Asia, because we don't want to trade Asia. Let's do that to the end of Asia. And if you don't want to do this, if you don't want to do this by clicking it, you can also drag this thing, right, somewhere there and click on play. It will do it itself for you, right? You are seeing it. It is popping up in real life. It's like you are there watching it. You can see on the right-hand side, I'm seeing how price traded onto the order block. I'm seeing it, see the way it's pushing into the order block, right? And I'm watching it live. Okay, so we are about ending Asia now. Boom, Asia has ended. So I can pause this thing and I can start trading. I can now go back to 5 minutes. Let's say my entry is supposed to be on 5 minutes. I can be checking this thing one by one, right? I can be checking it one by one. Okay, I'm inside that order block. Our strategy says we should sell if we're inside the order block, but we must take out Asia high and it must give us a candlestick pattern, right? You must take out Asia high and it must give us a candlestick pattern. So you can see Asia high has been taken here, right? And this is the candlestick pattern it has given. So in this case, I want to take a trade from that point, right? And this is going to be how I'm going to take the trade. My stop loss is going to be like that, right? This is going to be my TP. Let's say in this case, I want to do TP 1 or 2. If you want to do TP 1 or 2, it means you have to take 2 trades. If you want to do only 1 TP, let's say you're going straight to TP 4, for instance, you take 1 trade. Now you want to reach 1%. First thing you ask yourself, do you want to take this thing as market execution or you want to take it as retest? This was when it broke, right? If you are taking it as retest, you come here. What is the price there? You can see the price there is 1.18845. 1.18845. So I'm not entering market execution, I'm entering pending. So you see here we have market, but this time I'm entering for a pending trade. I'm entering a pending trade. So I'll come to pending. What type of trade do I want to do? Is a sell limit. I want to take a sell limit, right? The sell limit is how many pips away from here. I'm entering a sell limit from here to this point, which is about 2 pips away. So here, if I put sell limit now, that's 20 pips. Let's delete last. 2 pips, sorry, 2 pips away. My sell limit is 2 pips away, right? Now, if my sell limit is 2 pips away, which is around here, my stop loss is, let's say, 6 pips. My stop loss is 6 pips. That's what I want to use for my stop loss here. So my stop loss here is going to be 6 pips. See that? 6 pips. So if my stop loss is 6 pips, what do I want my take profit to be? 23 pips. Here I'm going to put 23 pips. This is the way professional traders trade. Traders don't just look at, I like the way G is, the way this thing is going. Let me use 0.5. You didn't even calculate your stop loss. Next one, G is moving, gold is using. I'll use 0.5 too. No, you won't know if you are going to make money or not. You have to be logical with this, right? So you've done that. In your lot size, do you want to risk per lot? If I want to risk per lot, I'll come here and calculate. I'm using a, how many pips stop loss was that? 6 pips. Okay, if I'm using 6 pips, here I'm going to have 6 pips as my stop loss. I can calculate my lot size to be 1.67. I can come here and put 1.67 as my lot here. Or I can simply just click on this lot here and say risk percentage. I want to risk per percentage. Or if you put risk percentage, this 1% is going to calculate the lot size for you and put the lot size. Or you could say, no, I want to risk money. Okay, so how much do you want to risk? $100. You put the $100 there. So let's say in this case, this is a $10,000 account. We want to reach 1%, which is going to be $100. We'll leave that. Now, when I click on sell limit, it has placed a trade for me, right? The trade is appearing in my 4 hours. It's also appearing in my 5 minutes. That is the trade. That is the stop loss. And this is the take profit, right? If you feel you did some mistake, or maybe this stop loss is small, we can come here, delete the last one, delete the last one. Come here, let's make it like 8, right? And place sell limit. Boom, it has put your stop loss or take profit. You can do any amendment, right? So once you are done, you can now start clicking. Now, at this point, it has activated the trade. How will you know it has activated the trade? Look at this place here. Down, inside this small dialog box, you can see your equity has dropped and your floating P&L is -$6. You're in the trade already, right? You can click to see, okay, those people talking about order block. Can I do this? I can tell you when you are doing this, as this thing is coming near your stop loss, your body will be shaking. The way you normally get scared in real life, that's how to be shaking. Some of you, when the thing gets there, you now go and move the stop loss. You will come and amend the stop loss. This type of thing that make you blow accounts, it will happen here. You are seeing if this thing can work. How many times will I lose? How many times will I win? You are seeing it live. It's happening to you live. It's not that you just went to the screen. You say, okay, if I enter here, if you move like this, I'll make this TP. You are doing it live as if it is real life. You are, boom, stop loss hit. Your account has dropped. Bam, you see that one. You are still inside the order block. You are looking for reasons to sell again. Oh, okay, let's see. So by the time you've done this, okay, you do it for 5 minutes. Afterwards, I don't like the result that 5 minutes is giving me. I think I'll prefer 15 minutes. You go and do it again on 15 minutes. It's a lot of work. Trading is not what people say, they just go in and make money. It's not that easy. It takes some work before it begins to become easy, right? So let's look at this again. We are going, oh, we see another candlestick pattern now that has been formed again. So and you're still inside that order block. So let's say you still want to sell, right? Let's say you still want to sell now. Now you have your stop loss. You can come here, you see these trades. You can click here, you see your trades, your closed trades, you can see it. It will show your closed trade. You can even export it to Excel. You can even see your statistics. You can see the graph, how your equity is dropping. You will see everything. You will know if I trade this thing the way they say I should trade it, how much will I make? It doesn't mean you make exactly the same thing in real life, but it gives you an idea. You are not just picking a strategy because somebody taught it. You have done your work yourself, right? So here we calculated from this point to this point, it's like 10 pips. Let's make it 12 pips. So here now my stop loss is 12 pips. So if my stop loss is 12 pips, what would be my take profit? If my take profit is 42 pips or 48 pips, as the case may be, times 4, and I'm placing a sell limit. My sell limit is how many pips away from here? My sell limit is 2 pips away. But I'm going to use another method. Instead of saying my sell limit is 2 pips away, let's use this method. I'm going to check the price there. The price there is 1.18897. So instead of distance in pips, I'm going to put price. And here I'm going to type 1.18857, if I'm right. 1.18896. 96. You see, I used price now, not distance. And I'll click sell limit. It has placed my sell limit. It has placed my stop loss. It has placed my take profit. Let's see if this thing will play out. You check. You are in the trade right now. You are in the trade. It's moving. It's moving. You're in that trade. Look here. You can see your profits. Also, your floating P&L is showing too. Your floating P&L is showing as price is going. You are seeing it. All your emotions are in this thing as it is going. Your emotions, and if you want to do it real life, you don't want to be too fast, you can drag this thing down, be playing it, and see how it will behave. You will get more friendly with the charts, and candlestick patterns will make more sense to you when you do a back test like this. You are not just using your eye to check. You are watching it. It is playing out. You are seeing how it plays. This thing went into the next day. Can you hold your trade into the next day because you want to get a 1:4? Or are you one of those that will close it instantly? You are watching. Sometimes you'll be in profit. The thing will come back and hit your stop loss because you didn't close it. If that is what your trade plan says, you follow it, right? Let's pause this and make it very fast. Let's make it 15 minutes so that I'll be taking 3 candles. Let's see how this thing went. Oh, it came back to our entry. And then if you're one of those who that closed it, you missed that money because you closed it early. The thing is still going on. This is the 3rd day. You say you want to trade order block. Order block is king. This is what order block is showing you now. Look how this thing came close to the TP here. Look at it on 4 hours. See the way it tapped the TP and it didn't close it. Shy. Market makers, they don't want to. These brokers are wicked. Please, this is not brokers here because broker did not even know you are doing this thing. So those who that shot the broker, they are monitoring me. They didn't monitor you. Price did not touch your stop loss, your TP. That's just it. Broker will not sit down and be monitoring your account of $500 like they don't have work to do. Right? It didn't hit your TP, it didn't hit. But if you were there live, you could have closed it. For example, I can go previous bar like this, and let's assume my trade plan says when I'm 2 pips away from my take profit, I can close. Look at the way it tapped that take profit. You just tap it. If my trade plan says I can close it, I can come here now and say close all. You see, where is my close now? Where is my close? Yeah, I can come here if I go to market and say close all. If I close all, this account would have grown by 2.8%. Notice how I lost the first trade, but now I have made 2.8%. You can see that the strategy, but I won't close it. Let's leave it. Let's assume you were a busy professional and you're at work. You couldn't close your trade. You come back, feel the pain. Feel the pain of seeing a trade come 1 pip to your take profit and then go back. Feel it in real life. See the way it went back to entry and almost touched stop loss, then come back to hit take profit. It almost touched your stop loss. Let's take it again. It almost, see, it went back, almost touched your stop loss, and then came back to hit take profit. Anytime you move your stop loss, you are telling your mind that I know what price will do. Price is going to pull back in my direction. And that is called a lie. What you just told yourself is the definition of a lie. You don't know whether price will get your stop loss or your TP. This scenario here has proven to you. If this thing happened to you like 3, 4, 5, 6, 7, 11 times, next time when you are trading live, you will not be bothered about TP or stop loss again. You set it where you want to set it and walk away. It's not the one that once you enter a trade, you are married to your phone. All the power bank in the office, you use everything because you enter Euro USD 0.01 lot size. If you want to use stop loss hit, if you want to take profit hit, does it have an edge? This one has an edge, right? And it has done what you want it to do. So we have taken one trade and the trade has closed and our account is up with $296, which is 2.9. The reason why it is not, because we went for 1:4. We've lost one before. So this should be 3%, but it's not up to 3%. Why? They charge us commission. They charge us swap. They charge us swap. So you can see, now you are seeing that making 3% does not, 3R does not mean that you make 3%. Why? Swap will be taken, spread will be taken, commission will be taken. If you want to see again, go to your charts, go to trades, go to history. You can see your trades. These are your trades in history. These are the trades that you took, right? So see the first one that lost $100. See how much they charge you in commission, right? See the second one. See how much they charge you in commission. See how your account grows. See your closed trades. These are your closed trades. You can see them. This one took 2 days to hit your 4R. This one took 55 minutes to hit your 4 hour. Look at your statistics, right? You can see your absolute drawdown, 1.88%. Relative drawdown, you can see it. You can see your gross profit, gross loss, expected payoff, profit factor of 3.92, very good, right? Number of open and closed trades. You will see it if I trade this if I trade this Hikinashi strategy, if I trade this what did they call it? AQZ. If I trade this order block and I trade it for 6 months, what do I think I will get? Right? You check, you can see your graph, how it came down first. Most people, once it come down for 2 days, they will change the strategy and go and look for another one. And up to now, they've been looking for a strategy since 1990. Right? You can see it. Right? If you want to be seeing the news, if you want to know when news is happening, come here and click on news. Even though it's not available, you have to go and download the data. You can see how news is affecting you, right? If you want to see your sessions, you can be seeing your sessions. If there is daylight savings, like on Monday now, London Open started 9 o'clock instead of 8 o'clock, right? Because of daylight savings, it will be reflected here, right? It will be reflected. So now you can see order block works. Order block works. Somebody else can say, I don't want to trade order blocks. I want to trade clicks. Let's go back, which is why I put reverse. I made it to have reverse. In real life, don't go back. Trade what you want to do. I'm just giving you guys an example. So there are some other people, they say they want to trade clicks. If you don't know what click is, well, the guys in the fostering class knows, and I can't give everything out here. So, but here we have, on the 4 hours, we have our first click. So the guy will be saying, when price comes here, that's when I'll take my trade. That's what we can see. This guy is saying, when price comes here, I'll take my trade. So he moved by 4 hours, and he's looking at clicks on 4 hours. He moved by 4 hours. He moved by 4 hours. Price didn't come there. Price created a new click. That guy will say, okay, when price come back here, I will look for opportunity to trade on 5 minutes. If you give me a bearish engulfing or any candlestick pattern. The next 4 hours, the next 4 hours, the next 4 hours, the next 4 hours, price is coming close. Let's go back to 5 minutes and see whether it will get there. Oh boy. Oh boy. See how long you have to wait. You are seeing it in real life that this thing, you have to wait. Price didn't get back there. So all this sell that happened, this guy did not enter it. Can you stomach that? Can you take that? That price will drop and you are not in it. How will you know how you will feel? This is one way you will know. Remember, I said it's not the best method, but it's one of the methods. Let's continue. You are watching. The guy wants to use clicks to trade. He's going to look at a trade when price gets there. 2 ways. It's either put a sell limit or hit. A new click has been created. Look at the new click. So now he has 3 places where he's looking to sell if price gets there, right? And he will set an alert and move. When price gets there, he will be alerted, and then he will take his trade. When price gets there, he'll be alerted, and then he will take his trade. So he's watching and waiting for price to get there. Let's use 15 minutes to make it faster. 3 candles on 5 minutes, right? That guy missed that. Boom, that is the click. So you go back to 5 minutes. What is this guy? He will get an alert. He'll get an alert. The price has arrived at yesterday's high. Remember, this is yesterday's high. Look at the dot there in 5 minutes. That's yesterday's high. Price got there. He started looking for an entry. Price went to the second click, and then price gave a bearish engulfing candle. Right. So this guy is willing to take the trade. He will take the trade from here and place the stop loss appropriately. Right? Now this guy is willing to come all the way from one click to the next click. The closest click you can see is this. So this guy is not going to use RR per se. He's putting his take profit or stop loss at that particular price. That price is around 1.1856. So this guy is going to calculate what is my stop loss. My stop loss from here to here is like 9 pips. So my stop loss is going to be 9 pips, right? And my TP is going to, instead of putting TP in pips, I'm going to put TP in price. My TP is going to be 1.1856, 1.18560. That is my TP. right? Our account balance is still 0. This guy is going to enter market execution because price is very close to his entry. So he sells, right? He sells. Boom, the lot size has been calculated. And let's see, the guy is in this trade already. The trade shoots, boom, and the trade hits his TP. This guy has grown his account by 4.18%. But look at how long he needed to wait. Look at how long he needed to wait. Those of you in the fostering program, I posted a result of somebody who cleared FTMO in 2 days. She had to wait. She waited for the strategy, waited for price to get to where he wants to, enter it. There was RBA news overnight. All the JPY pairs and Asian pairs dropped. Bam, 2 days, FTMO cleared 10%. That was all. So you can see this person has to learn how to wait. That's how you test your strategy, right? I'll do one more strategy and we'll call it a wrap. So I'm going to use another strategy for scalping, and we're going to use 5 minutes and move to the very next day. Yeah, let's move to the next day before we start this one. This day has ended already. Right. So let's say you have a scalping strategy, and the scalping strategy, for those of you in the fostering program, I want to test that scalping strategy that you and I discussed on which day was that, right? This is the last candle, and price closed above it, right? After taking the paycheck, price closed above it. So we are anticipating for price to come back for us to buy. And the number of pips from this point to this point is like 2 pips. So we are going to have a pending limit, which is going to be a buy limit, and the buy limit is going to be at a price distance of 2 pips. Our stop loss is going to be from here to here, about 5 pips. Stop loss is going to be 5 pips. Our take profit is going to be open. Remember, guys, our take profit for this one is open because we are scalping. So we have a buy limit set, boom, and we are waiting for price to come. So price picked us in and then started going, right? So we are our take profit points. We have a C liquidity and a paycheck you can see up there, and we are hoping that price will take us to that point. Price went straight for our stop loss, and we didn't break even. Then gave us another entry, right? So now you can see that this particular trade would have gone straight to stop loss and give you another entry, and you're willing to take your entry, let's say the same parameters, and let's have let's go back one more bar. Same parameters, have a buy limit. That's how you manage your strategy. You pick, it has picked us, and it is going, and it has hit our paycheck. So when it hit our paycheck, what do we want to do? We want to trail our stop loss. We want to trail our stop loss. Our stop loss is presently here. We want to trail it. So what do? We go to trade. These are the trades we have. These are the trades we have running. We'll modify it. I'll click on modify. What do I want to modify? I want to modify stop loss. I want to modify something, right? You accept after doing your modification, right? And you allow it to go. So here we are clicking upon the first bearish candle. We want to close everything, delete all. Market, close all. Now we've grown our account by like 5.56%, even though I use 2 strategies. But what you guys want to do is use only one strategy. You will discover that it's going to take you like 1 week to do 6 months data. And it will also generate how you can analyze the data. Like I said, you can go to trades, you can see your history. You can see the closed trades. This is like a journal for you. You can see your statistics. If I trade this thing the way they said, is this thing going to make money for me? Is it not going to make money for me? You can see your graph. With this, now you can ask, okay, I like this strategy enough to go and forward test it. Any trader that is not doing this, any trader that just pick one strategy we teach in Simply Pips or any other strategy, I don't care whether it is BTMM, I don't care if it is ICT, I don't care whatever the strategy. If you've not back tested it and you've not forward tested it, you don't know the strategy. Nobody pays you money for knowing the definition. They pay you money for executing flawlessly, right? So I'm going to pause here. I think I've covered enough for this, and you guys can go try this. So I'm telling you guys the gospel truth. I'm not marketing anything. If you don't do it the proper way, you can't get the proper results. As simple as that. No shortcuts to these things. No fostering program, no mentorship can make you a good trader if you don't put your own work in. You will trade your own account yourself. Else, go and follow a copy trader and copy them. There are many of them. In fact, there's one that is popular now that is just coming in, intelligence, something. I'm going to do a video on it over the weekend. So those of you that want to join can join. So I'll stop recording right now and give you time to ask questions.